Hi, everyone. This is Rob Roy of EWO Options, and welcome to TradeFinder Live. Special welcome for those of you that are live streaming on the different social media platforms out there. For those of you that have been here numerous times, welcome to you as well. If you are new, this is not the normal background. Those of you that have been here before know that this is up in the mountains for the holidays. So a little different background here from the cabin versus what I call the Dragon capsule with all the screens, etc., at the office. So again, welcome to everybody. If you are new, this is how TradeFinder works. First of all, we have to show you this disclaimer. If you've not seen one of our videos before, please take a screenshot of this, read it in detail at your leisure. You've seen it before, you know the drill. A couple of things that the powers that be want us to make sure you're aware of. Number one, we're not registered to give individual investment advice in the United States. Number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. And that's because we have a lot of international viewers. All right, so here's how TradeFinder works. We'll do a brief update of not just our market, but some of the international markets as well. And if you only like trading the US market, don't tune out when I do the international markets, because they're going to show you symbols that can be traded on the US market that may be referencing other markets, and they could have good chart patterns that you want to trade here as well. Then we'll do a review of any trade alerts that we've closed for our EWO Options alert subscribers this week. Gives you an idea of how that works. And then we'll go through and highlight the case study considerations we've identified in some of the past trade finders in case the position might be considered to still be open. Then we'll look to see if we can find a case study consideration for tonight. If you remember last week, it was a bit challenging finding something, see what we can find for tonight. And then with whatever time we have left, we'll open it up for general Q&A, which often results in you guys asking about your favorite stock symbols. And we take a look at what our technical indicators may have to say about your indicators. All right, with that said, let's go ahead and take a look at the markets. Now, first of all, in looking with the S&P, we've had this happen 2 days in a row now. Yesterday, the futures were up and then came and turned around and sold off. And then today, same thing happened. But today we had a really, really hot PPI report that came out.
We can't see your screen at the moment.
Change it. Yep, forgot that already. First one up. Zach reminded me of that before I start and forgot on the very first click. All right, hopefully now you can see the chart. And what you want to note on the chart here is a big doji right there on today's chart, which I think is really interesting. One of the reasons that we didn't send out any new alerts for our subscribers over the past couple of trading days. Number one, yesterday's move down, as bad as it felt, really just rectified an overbought condition that we had. We're right up here against resistance. And it makes sense, and we're not just going to go powering through that. So bumping our head against that, that's when you're just kind of patient and wait and see, are we going to be able to blast through that? Is it going to hold? Are we going to move back to the downside? That's what resistance and support levels do. And so just moving back down to close the gap with the 10-day moving average yesterday made an awful lot of sense. Well, today, as I was mentioning, the PPI report came out, and it was really hot. And then we talk a lot about the CPI report, which is the consumer price index, and that's what we pay, the actual public. But the producer price index is wholesale prices, and it was the highest reading on record. So that's way up there. So that creates this confusion that exists in the market. If the producers at the wholesale level are paying more, are they going to be able to pass that on? If not, if they don't feel like they can raise prices in accordance with what they're paying on increased prices, well, then that cuts into profits, right? That cuts into corporate profits. And so that's going to affect earnings. And the market doesn't like that. But if the wholesalers feel like, all right, we're paying more, but we're just going to raise our prices, and then the general public will pay for it, the consumers will pay for it, and then we will be able to still realize the same amount of profit as before. So can the wholesalers pass on the increased prices? That's the question. And you can see that the market today didn't really know the answer to that. And we sold off and we traded to the downside all day, but the doji at the close is telling us that market isn't really sure what that means or where we go from here. We did close below the 10-day moving average. So even though we closed the gap from being overbought primarily on the 7th there of December, where we rallied back up to 470, and then we kind of looked like we were going to take a run at it on the 10th, but backed off yesterday. And then today, you can see what happened with that PPI report. So it's kind of up in the air as to where the market goes from here. You got a little bit of a gap right there from the move down, not too big of a one, but a little one, but a pretty nice doji on the chart. And we're not back down to the 50-day moving average yet, which is the royal blue line. So we closed below the 10, we're above the 50, kind of no man's land with a doji. When that kind of stuff happens, it's best not to trade. You just sit back and you wait, and then you let the market tell you where we go from here. We've tested the 50-day moving average numerous times. Perhaps we come down and do it again, or perhaps that doji means, all right, that was it. Pause for today, and we move back to the upside tomorrow. Obviously, tomorrow's market will give us the answer, but for today, it's best just to kind of watch things, kind of create where you think things may go. I'll give you a couple ideas on sectors that tend to do well when we have this kind of inflationary issue. We'll talk about those in a minute when I go through the markets. But with that, let's take a look at some other markets that you may want to consider. Our subscribers really like to look at the Dow, so we'll bring up the diamonds, the DIA, and see what the Dow looks like. They've not been exactly in sync lately, and you can see kind of different. Last week we talked about this Thursday night on their insiders meeting, which we do one of these on Thursday night as well for our alert subscribers only. We invite everybody for this one for TradeFinder, but the Thursday nights for subscribers to our alert service only. And we talked about this being a bit of an island reversal, or potentially. And that's when you have a gap down and then you have a gap back up. So these bars here are just kind of floating on their own. So two gaps to get filled. And we came down today and down to support at 355, which you can see on the chart pretty clearly is a major support area. So a little different there than the SPY, where the SPY is kind of in no man's land right now. The Dow is sitting right on top of support that needs to hold. It does have a bit of a doji as well, so that's similar, but it's sitting on a strong area of support, and potentially we could make a run to move back to the upside. We'll have to see what happens tomorrow. The other thing that's different is we just had a positive 1030 cross. That lime green line is the 10-day moving average. The fuchsia colored line is the 30-day moving average. So a bullish cross there with the 10 crossing above the 30 and sitting on top of support. If the Dow is going to bounce, this is a really good spot for it to bounce from. Doesn't mean it's necessarily going to, but if it's going to, this is where you would expect it to move. So the Dow looking perhaps maybe a little bit better than the SPY at this point in time. We can look at the Qs. You can imagine that interest rates, we'll take a look at the TNX as well, maybe changing a bit here with that PPI report, and now kind of giving a bit more of potential pressure on the Federal Reserve to move faster. I think that played into the market as well today, as far as whether or not they're going to be able to taper as slow as they've been going back and forth on it anyway, but now that's in doubt again. And you can see down below the 10-day moving average here, right at the 50-day moving average. So that's going to be a bit of an issue as far as what happens with the Q. So let's just go ahead and bring the TNX up right now, and we can get an idea, because as interest rates go, that's how the tech sector goes. Pretty much a rule of the markets, if you will. Not a big move today out of interest rates, but tomorrow we have the Federal Reserve meeting. So another reason to kind of sit on pause. The market didn't really know how to handle today's move, and then we got Fed again tomorrow. So we'll see what they have to say, and whether or not they give us any sort of an idea, a hint. It was just a regular Q&A with Janet Yellen that Powell came out and said, yeah, we may have to take a look at the next meeting of tapering faster than we thought and getting to a rate hike faster than we thought, and that reversed the market then. So then we recover from there. And now here we are back again with the super hot PPI report that came out today. So not a big jump in interest rates, but that could change tomorrow. That could change based on whatever happens with the Federal Reserve's comments tomorrow. You can see we're kind of sitting here on an area of pretty good support for interest rates here. We have that wave 4 at the 61.8% fib level. I mentioned in the past, this is one of my favorite or is my favorite fib level. I think it's the strongest one. So you would think that there's a pretty good chance that interest rates bounce from here. We'll have to wait and see. But at this point in time, just sitting on top of that support level, we can put the 10-day moving average here. We're trading just below it. But that fib level and the support at 14 kind of dictating where things go with the TNX at this moment. The IWM small caps, let's see what's happening with them based on what's going on with the markets and down to level support. It was 210 for quite a while, most of the year, and it's kind of worked its way up to where maybe 215 is a little bit stronger area of support, and that's where we are right now. So the IWM needs to hold at this spot. And it gave us that false breakout above 230. Looked like it was ready to run. Perhaps the move was just a little bit too vertical and it couldn't hold it. And so back down we came. And now we're sitting back down in support here in this area. Held in the beginning of December, can it hold again? I think a lot of it plays into what Chairman Powell says again in the comments that come out tomorrow. So you can look for a volatile day. It's one of those things when the Federal Reserve makes comments that you get a knee-jerk reaction, and quite often that reaction is retraced. So you don't want to make any sort of trading decisions based on the initial move unless it's allowing you to close something out. And because again, it usually gets retraced and often completely reversed when that occurs. Bitcoin, take a look at Bitcoin. Everybody wants to see that. Again, welcome to all of you that may be live streaming out there on the various media platforms. We'll see what Bitcoin been struggling. Kind of a time of the year where it tends to anyway, but if it's going to rally, this would be a point where it might want to. And also we have the support at 48. We've talked about this pretty much where we were last week, that this level needs to hold. If not, we come all the way down to 40,000. So that would be a pretty significant move lower if we can't hold right here at 48. You can see that that's the next level of support. The move from 40 to 48 was pretty vertical. We had a little bit of consolidation here and then boom, it went up. So we broke it, came back, tested it, broke it again, went off to the races a bit. And now here we are right back down at this area. And look where that wave 4 is, also right at the 61.8% level. So 48,000 is a big area of support. If we can't hold that, then everything changes. Perhaps we lose this wave 4 and we start looking at violating the wave 1 high. That means the Elliott wave pattern becomes disqualified. Lots of stuff could happen. So if you're trading Bitcoin, you want it to hold in this area. And for those of you that are viewing, I know it trades 24/7. I understand that, but we look at end of day charts here to look at the patterns. And so it gives a print for an end of day type print, just like futures, et cetera, does. But certainly been a bit of a pullback on Bitcoin. And what's the reason? Is it just because of what's going on in the market? Is there less risk appetite? That's what some people are saying. Inflation could be bullish for gold. That's one of the areas that you want to look if inflation is coming back. So gold may be able to find a bid. We'll take a look at that in a couple minutes and see where that could be going, because I imagine that'll be asking the Q&A at the end anyway. So we'll just head that off and look at it here in a moment, since that's one of the sectors that I was going to tell you is a place to look when inflationary pressures rise as they are at this point in time. So money moved back to gold. A lot of people felt that money came out of gold and went into Bitcoin. Are we going to have the reverse scenario? Is the Federal Reserve ever going to come out with their digital currency? There's been a lot of chatter. I talked about this in the last SPY update. If you haven't seen it, you can look at it on YouTube. For those of you viewing on YouTube, you just go to our channel at Elliott Wave Options and look at the last SPY update and see all the past ones. And you can see all the commentary going back for quite some time. But we talked about the issue here with the Federal Reserve creating their own digital currency, as well as legislation in the new infrastructure bill talking about taxation considerations for digital currencies. And a lot of people think that's put pressure on it, but we've known that for a while. Even though that just recently was passed, we knew it was in there. And so I don't really think that's it. I don't think it's the legislation side of it. But there could be a viewpoint of perhaps money could move back into gold if inflation is going to stay this high. And people want to catch where the momentum is, right? So the momentum was in Bitcoin. If the momentum moves to gold, that could be a driver of moving money back over there. We'll see. The XJO for our down under friends in Australia. We had a nice rally back to the upside after this big triangle. We had a break to the downside and it caught its support. So we had this big, huge triangle here, and you can see it broke to the downside, but it held where it needed to hold. So there was the triangle. And then we came down and held right in this area, right through here, right around 7,200. And we bounced back up, but look what it did. All it did was retrace the breakout. And that's one of the characteristics of Elliott wave corrective triangles is when you get a breakout, at some point in time, that breakout gets retraced, sometimes sooner, sometimes later, but it gets retraced. This time it did it immediately. So it came down to support, right back up. Look where we closed. I mean, right smack dead on the point of the triangle. That's where we were. And then we've struggled over the past week since then. So not a whole lot has happened since last week when we chatted about the XJO. So kind of just also a la the S&P hanging in the middle of nowhere, a little bit of a break below the 10-day moving average, but look how the 10, 30, and 50 have all converged right at this same area. And then you draw a big line through all of this consolidation here, right in through there. So lots of congestion right in this area. So that's just a big area, the 7,400 to get back above. If you want to be bullish on the XJO, you want it back above that 7,400 level. The longer it stays below it, the greater chance there is of we move lower again. So perhaps we'll get some sort of an idea out of that. And then the Nifty, we've talked about this numerous times as well. And you know the levels. If you watched this before, you can recite them to me before I even show you. 49 and 47 were the two big levels. We said stay long if the stays above 49, but if it breaks that, beware, because we're going down to 47 in a very short period of time, which is exactly what happened. And now we're just sitting here at 47 because that's an area of support as well. So came down to this next area of support right here in 47. And if you want to be long the Nifty, you want this to hold, because if it doesn't, well, then we drop again. And we have another 2-point move to the downside because the next area of support's down there at 45. So it's trying to hold here, but it's still below the 10-day moving average. So not a bullish signal as of yet as far as the Nifty. And then the DAX, Germany, which has been the weakest of the charts that we look at for quite a while now. And we had this wave 3 and it bounced up, and we were talking about, could we bounce up towards this area and label a wave 4? Well, it's kind of rolling over and we didn't get up high enough. Perhaps it does label depending on how far we move to the downside from here, but it wanted it to get just a little bit higher on this projection. And if you're new and haven't seen this program before, this is called Profit Source. It's from the people at hubb.com. You can find out more about it. To me, it's the best Elliott wave software that exists. I've tried all that I know to exist, and I like this one the best. One of the reasons it is programmed directly from Ralph Nelson Elliott's algorithm, his mathematical algorithm. It's not somebody's adaptation. A lot of programs are individual adaptations of the algorithm. This is actually the pure mathematical algorithm that Elliott himself wrote. So it's one of the reasons I like it. Plus the charts are really clear, clean, and you can create your own searches, etc. So really cool piece of software. So now we're coming back down and we've got this area. Maybe we find a little support here. We consolidated at that 31 level. Pardon me, on the wave 3 move to the downside. We bounce back above it. Now it's trying to hold. Can it hold it? And then maybe bounce back up to this 4. So the DAX is a little bit more in a state of flux than where it was. Now, if you remember in the past, this was the wave 5 target originally. And so we came down there and then it relabeled. So the pattern relabeled to a wave 3, indicating there could be lower lows to come on the DAX, which is something we wanted to be cognizant of. Maybe we get a bounce up into the area for wave 4 and then a newer low. But right now, just kind of need to see what happens with that 31.5 level. Can we hold that and break back to the upside. Perhaps we get a little bit of a run. We label that wave 4, then maybe we want to be a little bit more cautious there again as well. So let's go ahead and look at gold. I said that I would, so we'll bring that up. And as of right now, you can see not really getting any sort of a bounce at this point. Tomorrow could change that, though, so you want to watch that depending on what Powell has to say. Doesn't seem like there's too many people willing to step in front of that. Perhaps they feel like Chairman Powell is behind the curve. He's already dovish, and so the Federal Reserve has been, and perhaps they're going to stay that way. They've already admitted that they're putting that transitory word to bed. That's done. They're not saying that anymore. They admit inflation's here. I think they have to admit that it's hotter than they thought it was going to be. I don't think that anybody would believe them if they didn't admit that, because the evidence is there in the numbers. Even the I call them BS numbers when you get the core numbers, because they kick out food and energy. I don't understand that. We pay those prices, especially in the CPI. We have to put gas in the car. Unless you have an electric car, we go to the grocery store, those prices, we pay those prices. They just kick them out because they say, oh, there's too much volatility in them. It's their way of keeping the numbers lower. I used to talk about this in live seminars, is that the government has a vested interest to keep the CPI lower, because if it goes above 4%, they have to give all entitlement programs a raise. So they don't want the CPI to be that high. So they just keep kicking stuff out. Anything that's going to keep that number in the upside, they just throw it out. It's just ridiculous in my opinion, but that's the way it works. So this would be an area for gold to perhaps find some footing. You can see we've consolidated here for what, we're going on 3 weeks now. We haven't gone anywhere. And maybe that's a bit of a, it's not quite, used to talk about this, the launchpad effect, when a stock sideways consolidates. I mean, like really sideways, creates kind of like the launch pad, live on the Space Coast. And so often you'll get a blast off from that level. So maybe that sets up here. That's not the classic look, but it's not too far off either. So it's a good area of support, and it's at a level that's held as support for going back to June. So again, I think a lot of stuff could happen tomorrow. So we need to wait and see what the Federal Reserve is going to say before we have indications on too many of these things. So that gives you an idea there of all the different areas that you might be watching in the markets. So I'm going to go ahead and show you one of the case study consider our actual alerts that we have for our subscribers. Now, note this one is in the speculative trade. So sometimes we find stocks that are not necessarily in the, it looks like it's still there, just making sure you're seeing the right screen, that aren't necessarily in the full-on Elliott wave impulse, but we have a set of confirming indicators that we utilize that complement our Elliott wave trades. And so if we see one that gives us an idea, we take a look at that as well. So you can see down here, so I thought I would update this, the DMI, or the CCI was diverging, and we have support there. And what's happened since then, since the alert was sent out, and we'll go ahead and bring the current chart up on PayPal. And let's talk about it on what would you do at this point in time when you see that sort of a pattern. Well, there was the break to the upside, as we talked about. So let's bring the CCI back up, because that was the main vehicle behind this. And note that it's kind of moved back to the downside. Now, what's important here to look is it did rally all the way up to 0. So it did continue to move to the upside from that point. But the ideal is for it to move from 0 to positive 100. If it does that, then you likely have a pretty significant upward move. Now you can see it's in a wave 5 pattern to the downside, but that wave 3 has an awful lot of good support. We had divergence in the CCI, so it looked like we could get a bounce, perhaps a bounce up to that wave 4 target, and a bounce that would fill this gap. You know how I feel about gaps. Gaps get filled. The data shows it. It proves it. It's like 94% of gaps get filled. So there's data that shows it. It's not just me saying it anymore. People went out and actually, put pencil to paper or whatever, and did the math and did the work to identify it and analyze it. But now we're coming back down towards this area of support again at the 180 level. So we didn't break above zero. We hit zero and we bounced down. So the whole key, pardon me, the whole key here is, can it hold 180? If PayPal can hold 180, we could bounce back to the upside again. We could get the break back above zero, head towards positive 100, and the original game plan is still in place. So there's no reason to exit this position yet. However, if we break through 180 with a follow through day, then you get out, or you make an adjustment depending on what the pattern looks like. But you leave your potentially bullish move to the upside if that occurs. So we have to wait and see over the next day or two if 180 can hold. So again, if you break a major point of support or resistance, you need a follow through a confirmation day. So one break below 180 wouldn't do it, but if there's a second day, a confirmation day, you're out of a bullish position and you look potentially for a bearish one, or you just close the position out and move on to something else. Those would be the things to look at. So I just thought I would go ahead and update that and show you when one's not maybe working out exactly as you had planned. I mean, we show, the ones that do great all the time. So let's talk about one that maybe is not cooperating at the moment. How do you handle it? What do you do? What's the decision making? We want to look at the 10-day moving average here. We're traded just below it. We'd broken above it. Really nice move right up to zero. Everything looked great for it to continue. And then we had the weakness in the market. We can look at the money flow. And the money flow is giving us kind of a bit of a positive divergence here as well. Even though it's below the zero line, you might be saying, wait, the bars are red. Well, when you're looking at the CMF, divergence, confirmation and divergence are the keys there, not just whether the bars are green or red or above the zero line or below it. You look for divergent signals. And so the fact that the weakening, it's weakening underneath the zero line is a positive divergence, because that's going up and the stock has been kind of moving lower. So from the CMF, like, okay, we could get a break back to the upside here because we have a positive divergence at this point in time. Maybe everything changes tomorrow, but tomorrow's going to be a really big day if I haven't mentioned that already in what occurs. So before we move into some of the other case study considerations, I told you I'd give you some ideas on where to look. Typically, when you have higher inflation, which we're going to, gold is a place to look, oil, consumer staples, utilities, healthcare, and the material stocks. Those are some sectors that you may want to look for that tend to do well in higher inflationary times. So we could see a market rotation, and I think we're starting to see that a little bit already. If you look at some of the stocks in those sectors, that things are starting to kind of turn and move back that way. Oil has that OPEC meeting where they said they're going to raise production 400,000 barrels a day starting in January. But then the price came down. And so they decided they were keeping that meeting, quote, in session, which means just the meeting is still not closed. In other words, they reserve the right to change their mind. Yeah, that's what you read into that, that the meeting is still in session. That's what they mean by that. So that would certainly, if they say, well, oil's backed off, you don't need us to increase production. We want the price to move up anyway. And that could certainly put a floor in oil and help it to rise in addition to inflation going to the upside. So just some things I wanted to share with you there along those lines. Now let's go ahead and take a look at some of the case study considerations that perhaps if you had followed them, you haven't closed yet. So they would be considered still open. Remember, we send you out, or we talk about these, we identify them in TradeFinder, and then you're on your own from there with the alert service. We send out entries, any adjustments and exits. We send those out to you via SMS or email, whatever you prefer. Most people like SMS, but you can find out more information about that on our website at EWOtrader.com. So Camping World was, this is an unusual one. I talked about this last week as well, and it really hasn't changed. This is one that is, it bucks the trend. Normally these triangles break out. Now they don't always break out immediately. Sometimes they form a larger triangle, but eventually they break out. In this case, you'll be able to see that it's just kind of went sideways, broke down, broke back up, and now we're still in between the area here of these levels, waiting for, looked like it was going to be a clean break to the upside. You had a really nice run. There was earnings right there on that bar. And so you had a good earnings report, and we continued to move up, got up to resistance, and it couldn't break it. Couldn't break the resistance there that it held, or the top that was put in back in May. And so that pushed it back down. And now we're kind of right in the middle point again. right back towards where the middle of that triangle was. And we'll see where the 10-day moving average is and see what happens here. It's breaking to the downside. We got a bearish 1030 cross. So now you're getting to the point where perhaps the put option could do well. Now, if this breaks, stocks can move down really quickly, as you know. I'm not telling you anything you don't know. Stocks move up, they move down, but they move down faster. We all know that. So with the strangles where we have a call and a put, if we get a significant break to the downside, it can make money in a very short period of time with big moves lower. So I wouldn't think inflation is positive for this, but this stock is kind of confounded me the whole time. I thought it would have broken down a long time ago when oil was up and rates were moving up. I thought that would have been enough to break the back and still try to break to the upside, but maybe it's all going to catch up to it now. And things kind of, when they don't make sense for a while, eventually that usually corrects itself and then does make sense. So it doesn't last forever. INFO, and this was one that we made an adjustment to for our subscribers. We initially looked at this as on case study consideration here on TradeFinder. We did send it out as an alert to our subscribers, and we changed it to a bullish position, and it ran to the upside here, pulled back a little bit today, but just kind of closed that overbought condition. So back to the 10-day moving average, but you can see that's made a really nice run to the upside since we adjusted it from being bearish to being bullish. So big move there. Now the XLF, this was maybe a little bit vertical when we selected it as a consideration. And so when it kind of consolidated for a while, pulled back, and now look where we are. We're right at this area of support here at 38. Now this is an area if interest rates go up, so that'll depend on what Chairman Powell says tomorrow. That could give the financials a bit of a footing. And I saw that the wasn't Goldman, Morgan Stanley's CEO today said he favored the Federal Reserve raising rates sooner rather than later. And you think, I mean, anybody in the financial world like that has a bank of any kind wants to see rates go up because that's how they make more money. Remember, they lend on the long end, but they borrow on the short end. So when the spread widens, that gives them an opportunity to make more money. So I thought, no kidding, you would like the Federal Reserve to raise rates sooner so they can make more money. That could be a place to look too. If we have higher inflation and interest rates are going to the upside, yikes, then we have to start worrying about that word stagflation. And that's a word nobody wants to deal with because that's the worst of all scenarios. I mean, it can be great for trading options because you get a lot of stocks that break to the downside, but overall the market tends not to do very well as far as an upward move. It's just not really good overall economically. In fact, it's a bit of a nightmare, but that's one of the beauties of trading options and why option trading continues to become more and more popular. So here was FND, and interest rates going up is not going to be good for this because this is housing, and it came down, and you could see that we had the support level that it could have held there at 130 would have been really good, and it didn't. So now we're at the last point of support. If it doesn't hold here, then if you were following this and were bullish, then you'd want to close this one out. But there's an area of support there at 120 and see if it can hold that before breaking back to the upside. Now, if this wave 5 is complete, then the expectation, because it wasn't greater than 100% wave 5 extension, that you come back to the previous 4, and that's down at 110. So that's 10 points lower. So if it can't hold here, and it looks just a touch oversold today down to the support level, but if it starts to break that, then you definitely get out of your bullish trade and perhaps trade it bearish back down there, or just let it go and forget about it. MMC, here was the entry look on this, and it was on 16th is when we first looked at this. So we'll walk it back to the 16th right there. And you can see it made a really nice move to the upside. Actually hit 175 here after last week. So on Wednesday, it hit 175. That's getting into an area where you may have wanted to take a gain. Wasn't a full 10% move. We do like 10% moves. It's pretty close, but wasn't quite there. So if you didn't close it out, you can still hold on to this one, but not are not holding the 10-day moving average and breaking below 170. Those two things are negative. So if you are still following this one, you need to see it back above 170 tomorrow. Otherwise, we're probably coming back down here to the 50-day moving average again. So that one would have been a difficult one to decide on whether you're going to take that profit or not. Again, it was a nice profit. And, you know, all profits are good profits. So just small ones doesn't mean that they're not good profits. And McDonald's, this is one that I had mentioned to you that I didn't understand what was going on with McDonald's, and because it had come down to the downside, and boy, it rectified that in a big hurry, didn't it? It just shot back to the upside. So we're going to go ahead and close that one off. You're getting greedy if you're staying in that one longer, even though from a positive standpoint, you could look at the fact of, well, you know, this is another place. If the economy is going to begin to weaken, if the Federal Reserve is going to raise rates, they're going to slow things down. We got inflation to worry about. So we've got these issues to be concerned about in the market. Well, McDonald's tends to be a bit of a defensive stock from that standpoint. And that's why I thought it was going to go up right away. It kind of gave a little head fake down there, wanted to come down and support or test that support at 245. So you can see it came down there, tested that support, and then took off. So just waited a little bit, but really nice move there. So we look at the 10-day moving average. It's a little bit of a vertical move. It got a little bit overbought. So if you wanted to stay long, this, you would want it to stay above 255. So that would be your point of, all right, it's overbought. It went vertically up, just shot to the upside. Perhaps it comes down to the 10-day moving average. Maybe it goes sideways here unless the 10-day moving average catch up. That's what happens when stocks get overbought. One of those two scenarios plays out. So you never know which one it's going to be. Obviously, consolidating and letting the 10-day moving average catch up is a little bit more bullish longer term. But hey, it's okay when the stock goes straight up. If it comes back down to the 10-day moving average, finds support and bounces from there as well. So that one turned out extremely well. And then PWR, just when we were talking about, hey, maybe you want to consider if it breaks that wave 5 high, looking at this from a bullish standpoint, look what happened today. Big move to the downside, or that was the entry, excuse me. And then you can see where we are today. We're even a bit lower than that. We need to hold this 110 from a bullish standpoint, but we put this on as a bearish trade. So we hope it breaks 110. Or a consideration. Pardon me, if it breaks this 110 level here, then maybe we can fill this gap down about 104, which would be a pretty nice move there. So just when it looked like maybe it was going to hold support and bounce, here we are right back down there again, looking very similar to what it looked like when we entered. So hang in there. And last but not least, we did look at this one last week. As I mentioned, we had a bit of a struggle trying to find one. And this triangle pattern on AutoNation, and you can see that it's broken to the downside here. So 10-point move already from last week to the downside, and at an area of, if you were bullish on this, you want it to hold right here. It needs to hold. It did bounce today off that 115 level, but when we look at the moving averages, you can see that it is oversold. So we'll see if it can bounce from this 115 level, get back up to the 10-day moving average, and then get back above 120, which is what it needs to do if it's going to run higher. If not, then that's it, and we just go ahead and close that one out. It's it's the auto industry is a tough one right now, because of higher interest rates, and you'd think, oh, well, they're getting a little extra kickback from the financing, so that's probably a good thing. There aren't a whole lot of used cars out there, so prices are really high on the cars as well. But then that's offset by volume, isn't it? Because there's not a lot of cars out there. So even though the prices are high and maybe they're making a little bit extra money off the financing if rates go up, but not enough products, so you still have to have turnover as well. So kind of a little bit of a double whammy there for the auto stocks. All right, let's see if we can find a case study consideration for this evening, and then we'll open it up for a few questions. If you haven't seen this before, this is the pre-computed list I mentioned on the software, you can set up your own search parameters and create your own trading system and back test it, do whatever you want. You go back all the way back to as long as data is available to test your systems. These searches over here, since I was using it, a lot of our Elliott Wave option subscribers started using it, I think. And so the folks at Hub created these levels here where it says Elliott Wave options. Those are for those that are Elliott Wave options alert subscribers and have the software program. So you have all these pre-computes as well. And any one of these that says EWO, those are my search parameters. So our alert subscribers have access to my searches that I look at every single day to try to identify candidates to send out for alerts. So pretty cool there. As you would expect, there's nothing on the bullish impulse side with what's occurred in the market the past 2 days. So that makes sense. And there's nothing on the corrective side either. So when we come over here, the next thing is this is the same scenario that we had last week. And you can tell that the markets haven't done a whole lot. In fact, if we go back, just jumping back to the markets with where we are, we're only slightly higher than where we were back in September because of this move lower. So not a whole lot has been going on with the market recently. You would think that we're going to make some sort of a break sooner rather than later when that occurs. So looking at the consolidating stocks here, see there's 70 of them. That's a lot. So what we're looking for is another one of those triangle patterns like we identified with AutoNation last week. So looking at that, 70 charts is a lot to look at. So you can narrow this down if you wanted to say, are there any triangles within a bullish wave 3? And so you click both those boxes and it further filters them. So instead of having 70 charts to look at, you can see there's just one. Arch Capital Group. So let's take a look at it and see if the pattern has any sort of a well-constructed triangle or not. And when we take a look at it, we can take all this stuff off. You could argue that it's a crude ascending triangle, but not really, right? So here's the resistance area right through here and coming up there. That's pretty vertical. So I don't know that I would consider that it's not a classic ascending triangle. Is it technically one? Yeah, you can argue that it's technically one. And if we look at the DMI, you can see that the ADX is really low and it's broken down significantly. That's the most attractive thing to me is it's even below 10. So I like when the ADX gets below 13, but when it breaks below 10 and gets into single digits, that's normally a point in time where something is getting ready to happen. So that's more interesting to me than the actual formation of the pattern. But then we look and we want a 10% move out of the stock. That's one of the things we look for as well. So you come down, where's the area of support? So this is the mouth of the triangle we're looking at. So this area is here, the upper side, upper line, and the lower line. So down here, we're just above 40, and then resistance is at 44. So that's just under 4 points. And so what I mean by a 10% breakout is if we have a $44 stock, we want it to move 10% of that price level where the point of the triangle is. So if it's at 44, then that would be a $4.40 breakout move. And since it's just under 4, that would be a little less than a $4 move. So we don't quite have that full potential 10% move. So could you offset that? You can if it breaks and moves vertically. But we can't count on that because there's 3 different kinds of breakouts. Sometimes they break and move vertically. Sometimes they just break and move off in a 45-degree angle. Sometimes they break out and they come back and test the breakout. And 2 of those 3 scenarios aren't good when you have a scenario of a less than 10% move. If it did broke out and it only went 3 or 4 points, then you could still make a decent return on those. But the 10% rule is to try to get it in that 30 to 70% return rate that we look for in the triangles. But let's see if we can find maybe one in the full list here that might be just slightly better. That's not bad, and having an ADX that low is certainly interesting. So let's look at Advanced Auto Parts. I mean, kind of staying in that same auto sector thing. That's a slightly better looking. That ADX, I think we're going to have some charts that are getting ready to show something's getting ready to happen in the markets. But you can see right here at 240, right in that area is resistance. And then we have our set of higher highs moving from 220 to 240. So that's 20 points difference there in the mouth of the triangle. 240, you'd want a 24-point move. So again, we don't quite have the full 10% there. And you can see that 220 is a really decent area of support right there. If it breaks to the upside, well, then we're in that clean air, the racing analogy that I talk about when you're in a race car. If you're out front, you're getting clean air into your radiator. The engine runs cooler and runs better. Often car will go faster. But then you, if you're back in the pack, you got everybody's exhaust. So it's hot air coming into the radiator. Your engine runs hotter. You're getting all the little pebbles and things coming off the tires. It's harder to mount a run from the middle of the pack. But anyway, you break above a resistance area where there isn't any resistance left. That's the clean air. And so sometimes stocks can really run. You get short covering and you get momentum buying on top of each other, and you can sometimes get a pretty significant run. So that's pretty interesting there. $240 stock. It's probably going to be an expensive potential strangle as well. So couple negatives. Let's see what else on the list here. IDEX Labs. Well, that's a nice looking descending triangle, isn't it? But $600 stock. So again, we're going to be dealing with the expensive side of strangles when you get stocks that are trading that high. So right there around 600 is support and a really pretty good area of lower highs, 600 to 700, so 100 points. So we're good there, but it's going to be too expensive for a $600 stock. So nicely in pattern though. Let's see where that ADX is. Starting to move back to the upside. It's that analogy that I use where the lava is bubbling under the volcano, getting ready to burst. How about gold? IAU. Yeah, looks exactly the same as GLD. Not really a good pattern, but at that strong level of support. GLD's on there as well. Iron Mountain is one I've done in the past. Pretty decent looking level of higher lows on the way up there, and then resistance here at 49. Let's see what the options look like here on IRM. Perhaps we have got a lot of choices. Spreads aren't that wide. All right. February looks pretty good. Going out to February. All right, so let's do that. That's going to be our case study. We're going to do another strangle. So for tonight on the 14th, it's going to be a strangle on IRM. And there we go. We got another. That's a really good place to be right now and see what happens with the Fed's meeting tomorrow and see which way the market breaks. Again, be careful. Don't get caught in, don't get whipsawed on whatever happens in the market immediately. Let that play out. Let it calm down. Perhaps even wait to initiate new positions on Thursday because that knee-jerk reaction often gets retraced. But tomorrow's going to be a super interesting day in the markets. That's for sure. All right, so we got a few minutes left to go ahead and open it up to some general questions. Zach, I believe Zach is with us from support.
Hi, Rob, we got some questions here for you. We'll start out. First off, we have a couple of symbols from Pankaj. I would like to look over AFRM.
Well, we're right back there to that 100 level. Pankaj, it needs to hold that. It held it and broke and looked like things were going good. It got back above 120. Would have been great if that would have held. That would have been very positive for a potential bounce even higher, but it couldn't hold it. Hit the 50-day moving average, and here we are right back down at 100 again. So it needs to hold here. Otherwise, it's going to come all the way down and fill that gap. So 100 is key. If it breaks 100, you either got to get out of a long position or think about going short. And it could be a really good short at that point in time. It's got a strong wave four. It's that 61.8% wave four that I really like, but it's testing that 100 level again. It's a little oversold today, a little bit of a doji. So maybe it can bounce back tomorrow, but it needs to. So a break below 100 and you could see 60. That's a pretty clear chart on what it needs to do. So if it can bounce above 100, then back to the scenario of it needs to bounce back above 120 again.
All right, the other one's going to be Twitter. I'm ready to make a decisive move.
Twitter. Well, it created a pivot point there on the wave three. Another one that was bouncing back, and now it's come back down, broke below the, I guess it did on Friday too, broke below the 10-day moving average, but it's hugging it pretty close. So I know it's not fun to let it go 4 points lower from here, but really supports at 40 where that wave three pivot is. It feels like it wants to hold that, but if it doesn't, if it can't hold that level there at 40, then watch out, because you can see it's got so much support there at 40. 40 goes back, and we're back in last year now, and then we probably have to come back to 30. Then would be the next area of support, and that's before the summer last year. So it 40 is really, really important that it holds that level. There's really nothing to stop it until it goes to 30, but man, there's a lot of support at 40. It's really hard to imagine it not holding there, but it's going to do what it's going to do. So we'll see what happens over the next couple of trading days, but 40 is key.
All right, next up will be from Angel. Hey, Rob, what do you see as a black swan in the near future or beginning of the year? Thank you.
We've been pretty good on black swans in the past, haven't we? So, well, you can't, we talked about way back when we did our 2020 forecast, we talked about a potential black swan being COVID. Nobody had heard of it back then. And man, that turned out to be really prophetic. But as far as I don't, black swans are unexpected. And so the things that could be negative, I think, are expected. The Federal Reserve raising rates faster, tapering off, and then raising rates at a quicker pace than we expected. So that can't be considered a black swan. We're really concerned about that. Inflation running rampant. We're already worried about that. So I guess a black swan could be this rhetoric that we have. It's rumblings. Is it just political rumblings, or because Russia's talking about invading Ukraine and China's talking about invading Taiwan? So I guess those would be things I would identify. War would be the thing. I think everything else is kind of already expected and baked in the cake. So some sort of war breaking out would be the black swan. And we don't have too much of an interest over in the Ukraine-Russia area, but Taiwan's one of our friends. And so that would really be sticky for the US if China were to invade Taiwan. So that one would have more effect on our markets, I think, than Russia invading the Ukraine would. So that's where I'd have to go, war.
All right. Next up would be from David. Does an island reversal foretell anything specific, or is that just the name of the picture?
Normally, when you get an island reversal, when it goes back in the other direction, that holds for a while. So when you see it break back to the opposite direction, so those are left floating on the island, and then the reversal, so the second gap, that direction usually holds. So you can have island reversals to the upside or the downside. But when it's to the upside, if the second gap is a gap up, usually not forever, but for the foreseeable future, the near term, if you will, that direction holds. So it does usually have a little bit of a directional connotation with it. Good question.
All right, next up will be from Nicholas. Thinking of shorting BT. What do you see on this chart?
BT. Is this the same Nicholas that had talked about Chewy? Because that was a good one. You can see really nice. Oh, look at that zigzag. Here, this is a great Elliott wave chart here. What a perfect one to explain Elliott wave. So there's your corrective triangle that occurred there. And you can see that it doesn't have a 5-wave pattern on it because it's in corrective pattern. So it doesn't label it as a 5-wave impulse. And so here you have a corrective triangle that breaks down, and it breaks down into a zigzag. That's just amazing there. So just classic, dead on, spot on Elliott wave. So yeah, so it's come down. It's already broken the 100% level, which means it's likely with a follow through to head down to the 161.8. So I would say that that's in the cards. So shorting that down there, but then you want to be careful. We're starting to get, it may even break that and come down and test 5, but 5 held before. And remember those important levels from an institutional side, 5 and 10, that aggressive mutual funds or investment companies, doesn't have to just be mutual funds, can own stocks that trade between 5 and 10, but it has to have an investment objective of aggressive. Once you get above 10, then you bring in the growth-minded investment objective, growth and income, et cetera. So the aggressive funds that can hold it above 5, and it looks like it was bought aggressively here when it bounced off 5 before, so they may come back in. So you'd have to watch that on the short side of when they may come in and support it again. But it does look like it wants to go down to that C wave extension at 161.8. Remember, it doesn't have to because it's already done what it's supposed to do. It was roughly, call it the 61.8% B wave correction, which gives you the 100% extension, but it's broken through that. And when that happens, often you continue lower. And yeah, the CCI is not flashing oversold, and the money flow is confirming today's downward move. Yeah, I think that's a pretty good short there. Just be careful if it breaks below that 161.8 to see if you could get another one of these rockets back to the upside.
And Nicholas confirmed that it was, yep, same me. So another good find there, Nicholas.
Yep, good call on Chewy. It dropped like $5 the next day, I think, after we looked at it last week.
Indeed. And so David would ask if you would please review the UNG trade.
We'll get into natural gas and oil a lot on Thursday. They're kind of in two separate worlds now. And a lot of times they trade together because they're energy, but oil has, that OPEC thing hanging over them, and the fact that if inflation's coming back, that's usually bullish. So there's a push-pull there. Natural gas, what's hurting it is the weather's so warm. The weather, we need to have some cold weather come in, and it'll spike it up in a heartbeat if we get just a really nasty winter storm to come in. But the weather's so mild that it's languishing down here. So that Elliott wave pattern's been disqualified. So you take that off, and we're sitting here on support. So it's trying to hold right here in this area of support, which is what we've been watching. If it breaks that, then it's a different story, but it's trying to hold it. And if it can break back above that 10-day moving average, is caught up. So the oversold condition has been rectified. It's consolidating. It looked like it was going to move up and then backed off again today. but this one could, I mean, it could be back up to 20 in a heartbeat with just a decent, rash of cold weather to come in. So, we're just watching 12, and we may adjust and add to it if it starts to bounce from here. But if it breaks below 12, then that may be it. That may be the death knell, because then this support area becomes resistance, and it would be hard to jump back over it. But there's room for it to run to the upside if it can hold right here.
All right, next up from CP, how about Oxy? I bought a call expiring February for 30.
I'm glad you got February, so you've got time. It's needs to hold this wave 4 right here, and it's at an area of support. So you could get some bounce from here. I mean, my viewpoint means nothing, but my personal viewpoint is I think OPEC's going to back off. I don't think they're going to go through with the production cut, because oil's backed off since they said that. That was when oil was screaming to the upside. And so it's a different world now. And I just feel like they're going to say, no, we want the price to be higher. That's an opinion. That has nothing to do with the charts or anything else. That's just a personal opinion. So take it for what it's worth. The chart is telling you this is at support, and it needs to hold right here. And I think it could hold right here and then make a run from this point in time. But if it breaks 29, then we're coming down to 25. That's the next level, because there's really good support down here. So 29 needs to hold. I think if I was holding your call, I would still hold it for now and then watch that 29 level, see if it can stay there, and mount another try back to the upside.
All right, and CP said thanks, and so maybe we'll wrap up this session with one of the symbols requested from YouTube. It's a fun chart to always look at, NVIDIA.
Oh, wow. Okay, good idea. Good thinking there, Zach. NVIDIA, certainly a highly talked about stock. It just been bulletproof for a long time, and then we got this vertical move, and it's just, this is so good here when it goes through all this kind of stuff. And there's your zigzags, just zigzagging to the upside all the way up, right back there, zigzag here, zigzag on. I mean, just classic Elliott wave zigzags, the great patterns, really good directional patterns. And then it decides it's got to go vertical. And I hate that. If you've listened to anything that I've talked about, I don't like it when things go vertical, because often when the stock goes vertically up, what happens? Comes vertically back down. Well, that's what has happened on NVIDIA. So now that we've got that out of our system, we got a pretty decent wave 4 there. It seems like it could come back down here. Maybe it wants to come down and test that area right before where it was when it went vertical, but it doesn't have to. We have the 50-day moving average right here, and it defied the market and actually closed above it. So decent day today in the face of the market. So maybe it doesn't come down to 260, maybe it bounces from here. So this would be kind of in the theme of speculative positions. If you wanted to speculate on a long position, that's as good as anything that I've seen right now. There's a lot of charts that are just a mess. There's not a whole lot of great looking patterns out there with the market flopping around. So if you wanted to take a shot at one, that would be it. There's your stop is at 260. If it breaks that, you get out. But it has rectified that overbought condition and could have caught itself and be ready to move back to the upside. So we'll see how that, let's see where the CCI is. It's diving down. We're getting down towards an extreme point. So it could turn at any time. Maybe it does go a little bit lower and hits that minus 200 level, and that gets you to 260. As I said, it could go down there. It doesn't have to, but anyway, that's my commentary there of if you wanted to take a speculative long, I think that's as good of any as at this point in time. So thanks, everybody. Thanks to those of you that were joining us through the streaming services. Appreciate you being here. And our subscribers and our consistent viewers, obviously very much appreciate you as well. sign off the same way every time. Time's the most valuable thing that we all have. And we very much appreciate when you devote some of your valuable time to spend with us. And in return, we try to make the use of that time as informative and educational as possible. So thank you again. Have a wonderful week.